You're getting these transitions mastered now, Jenny.
Oh, no, I'm not.
There was no black screen waiting for us to load in there.
Had no idea that was going to happen, actually.
Hey, you did pretty good there.
So, well, that was accidental.
Except you kind of warped me there for a minute because you had Friday down October 22nd. So I was thinking on that title screen, I was thinking, man, really? Friday, where am I?
Oh, I do. Friday. I do. Oh my God. I was talking to somebody the other day and I was like, they did my knee, right? But I think what happened was they did like some kind of brain surgery and now I'm just Mr. Magoo because it's like I can't get anything. I mean, it's just a constant fight for me to try to get, stuff done. Oh, and so this morning, farm life. So we have the dog that we took in. Remember, now we have the 5-dog pack, and we took in the neighbor's dog because the neighbor's dog was running away and kept running away, and she didn't want. We're not up on Facebook yet. Well, how is that working?
Yeah, it shows it's up. Maybe there's just a delay.
It must just be a lag because it says we're live.
Maybe maybe Facebook's running through that Amazon web service that went down yesterday and it's not up to speed yet.
And Earl's daughter's making fun of me too. So that's good. All right. So the dog that we took in that was the neighbor's dog that kept running away, right? And we were like, no, the dog just wants to be an indoor dog. It's not a problem. We'll make the dog an indoor dog, whatever. So last night, the dog's barking at the door. We've had coyotes really bad lately. And dog's barking at the door. And I'm like, David, don't let the dog out. I mean, I just had this feeling that dog was like barking and he had this, So yeah, Dave lets the dog out and the dog doesn't come back. So I get this phone call this morning, this text message. Well, the dog's in the yard across the road. So I'm like, oh, good. So I had to send Sam over. Then I'm looking out the back door and something, we had that real windy day. What was that, Sunday or Saturday? Yeah. Whichever day. Something must have happened to our rooster, one of them, because he came up lame. Dave went to put him up and he was lame. Something was wrong with his leg. Well, we have 2 roosters that came from the same clutch of eggs that have been, brothers that have been getting along just fine. But see, if you don't know the way roosters work, if one of them is down, the other one is going to try to kill it to take over. Just the way it works. That's why you have rooster fights. This is what they do. People are like, oh, it's so terrible what they do. Well, they do that anyway. I mean, you may have them in a, whatever. They do it anyway. So here I am. We live on a hill. They're down there fighting. And I know that the one has the other one. I mean, there's blood flying. So I'm like, how am I going to get down this hill on this knee? So here I am, like, doing this weird thing that people would just be laughing their butts off about, because I don't even know what it was. It wasn't like a walk, but it couldn't be a run. So it was just this thing. And all the while I'm screaming, stop it. Like they're going to do that. I mean, yeah. I guess I thought maybe it would, at least cause him to look up or something. So then I had to go down, separate them, get the one, which is now bloody and, about passed out, put him in a coop by himself, had to shut that coop off, had to get him a little water and food. I mean, it was like,
Farm life. Well, before too long, Jenny, let's fast forward maybe 10 years. Those roosters will probably have a brain chip, and you can just tell them to stop it and they'll stop.
Stop doing that. Okay. Shelley says survival. I mean, and it's true. I mean, that's just what they do. I mean, don't get me wrong. I'm not saying, we need to, let's get roosters to fight. I'm not saying that. I'm just saying they do that anyway. And it really pissed me off because I'm like, number one, I'm having trouble getting down there. And number two, why? Just leave him alone. What is your issue?
I think you could have a very profitable YouTube channel, Farm Life with Jenny. You just wear a little body cam that just records all of your daily, activity. I think you just would knock it out of the park. You'd be having 10, 20, 30,000 a month coming in on that. Yeah.
So anyway, here we are. And now I have a guest that I love this guest, but I never understand anything he's talking about. So it makes me feel even dumber. So, and now I have him on Friday, the 22nd, instead of Wednesday. Honestly, my brain, please help me. So, before we have Eric on though, did you by any chance happen to see your vote counts? It was Sunday on Channel 9. Did you hear anything about this?
No.
So apparently, Paul Rosino, who is a representative in the state house, and Jason Dunnington, who used to be a representative, but now he's a lobbyist, were on with Scott Mitchell on Your Vote Counts, where they called us liars. So us and Katie, basically, they called us liars for putting out information about Dana and Preston. Nobody liked the video.
Specifically?
Well, no, he didn't come out and say that. They didn't mention any names. They said independent journalists.
Oh, yeah.
And that we were inciting violence against state agencies, and that we were lying, and that the mainstream media needed to correct our narratives. So, the crazy thing is, and then the next day, we came out with an entirely different, what was the one that they came out with the next day? And so the thing I'm really concerned about, that I think we all need to be concerned about right now, is that these people, these rhinos, these statists, these tyrannists, these tyrants are really going to fix the narrative so that we end up looking like the bad guys to all of the people who don't pay any attention to what's going on, and then think, oh, these people. So this is what it was. So Oklahoma Watch, which is a private organization, don't tell me they're not part of the independent media. How did they get to be part of the actual media? Oklahoma Watch, who's funded by Schusterman, Kaiser, Arnold Foundation, Arnold Ventures. I mean, all these leftist organizations. So they embedded a reporter with this Oklahoma Predator Prevention Network. Do you remember Katie's reported on them before, when that guy at Western Heights, they found the Oklahoma Predator Prevention Network found out that he was soliciting young boys online and stopped them. So Oklahoma Watch's reporter basically got the two of the five of them arrested. And now they're being brought up on charges because, they're being mean to online predators.
Wow.
We are in so much trouble. I mean, we are in so much
Well, and
trouble.
you know what's scary about that whole thing is no one is closer to the source of what actually happened in the entire thing with Preston than Katie and probably you, Jenny.
Roberta.
Yeah, and Roberta.
Yeah, I mean,
100%.
so it wasn't like we were making this stuff up, pulling it out of our butts. I mean,
Yeah.
we were talking to the person that it was actually happening to. But again, these people live in the dark like roaches, and they do not like it when you bring their garbage out into the light.
Yeah.
And when you do that, then you become the problem. It's the same thing that what happened with the state election board. Don't talk about what we're doing wrong. If you're going to do that, you're gone. You're out of here. We'll just shut you up. We'll make you not a part of this because you can't talk about it. This is where we are in Oklahoma today. And if we don't start actually recognizing this, that we are getting ready to, I promise you, this is not going to, it's not going to get better until we elect some better people. This isn't going to get better. They're going to come after you. They're going to come after me. They're going to come after Katie. They will.
Yeah. Well, and you know, I guess what's somewhat good is even though at some point, you know, we're going to have to face that. And
yes, we will.
Every day that goes by, my inner middle finger is getting bigger and bigger, literally every single day. My wife, sometimes she's like, Michael, you're such a jerk. Sometimes I go, well, I said, I apologize. I don't mean to be. Make sure to call me out for that. But
had it up to here.
Yeah. But ultimately what that means to me, Jenny, is we're being effective. You know, the entire movement, the independent, the grassroots, you know, we're getting more and more effectiveness. So now they're having to actually address it on TV, on the mainstream, and try to, you know, sway everybody, you know, or discredit us in some capacity.
Correct. A lot of gaslighting just to discredit us. So, I mean, guys, everybody who's watching this morning, pay attention. And, you know, and that's true. They already did come after Dana, and then they're going to come after us for reporting about it. You know, don't bear false witness. I mean, it's just ridiculous. So please make sure, you know, when you have a chance to kind of stick up for not just us and Katie, you know, and Dana, obviously, but I mean, stick up for all of us grassroots who are out here, and Roberta.
Yeah.
And Roberta, for sure. I've had my heart blessed by hundreds of people who would prefer to stay comfortably sleeping than actually. Absolutely. Absolutely. Well, I'm glad and thank you for that, because I mean, it's going to get worse before it gets better, and we'd better start telling everybody what's going on, because the people who were asleep, as soon as they heard I was fired, for example, and I was going to be investigated by the DA or in the AG's office, that makes people go, what?
Yeah.
What did she do wrong? Because they're not thinking. They don't know what's going on. They don't know that we're not the problem. The state is the problem. They don't know that. So we've got to be messaging that and making sure that we're pushing back against this gaslighting these dork heads are doing. So
yeah, they sure just they don't want us asking questions.
No, they do not. Sure. That's right. Wake up, people. They are coming for us all, Carmen. I mean, it'll eventually be us all.
Yeah.
All right, well, let's bring on Eric so he can tell us what to do about money, and he can instruct me over and over again this morning, like 200 times. No, Jenny, that's not what I said. Get it straight.
Good morning.
Good morning.
Morning, sir.
Well, we're just trying to solve all these problems of the state. If we have sound money, that's one way that we can get solutions for people, which would be great, right?
Fair enough, but when you've got our president selling a stable coin while he's president to make himself money, and then saying, CBDC is going to be great so long as we control it. Once we control it, it's going to be fine. I mean, Eric, what do you do?
Yeah, I think that's probably the difficult question everybody's looking to try to figure out. So, one Well, one thing I would say, I have always have books sitting beside me. I think this one would probably be a piece of advice I'd give everybody: Public Bank Solutions,
Okay.
which I know is sometimes a difficult task to discuss with people because privatization is usually beneficial in most cases, that people have private businesses and structures. But I think what the federal government's trying to do at this point is move more into a public bank solution where you have 50 credit unions through the states that are kind of the lenders of last resort. And why that would be advantageous is we certainly have gotten ourselves into a lot of debt with the U.S. dollar.
No.
Yes, and there's still a lot of usury going on, which certainly hurts we the people. And as you look at that, there are actually examples. So one I would encourage everybody to look at would be the Bank of North Dakota, which has been it's functioned. It's a credit union basically that has been around since 1919, never not having profits, but reinvesting all that back into the state as opposed to into Wall Street and hedge fund managers and all of the banking class, which is what has gone on a lot in history.
So I want you to do the first thing first, because I mean, you and I had this conversation, and I think I understand it, but again, I'm not sure.
Sure.
Explain the difference between a bank and a credit union.
Yeah. So banks are primarily for-profit institutions. Credit unions are nonprofit and invest all of those funds back into their local communities and or states after individuals are paid contracts, right? Their executives, et cetera, they're paid out, but they then reinvest that money back in. They're also insured by different agencies. So FDIC insurance versus NCUA insurance, which is through the credit unions. And so both of those play a role in basically that banking option for the people. And if you're investing your money and holding it in accounts, there are different rules that exist for credit unions versus for banks.
Okay.
Yeah, so that makes it a little more difficult for people to understand. But what I would say is the key point would be the reinvestment of those funds back into the state as opposed to extracting those funds out of the state. So the example I would give would be your large scale banks, Bank of America, Chase Bank, et cetera. They're in Oklahoma. You can get an account with them. Their primary investment medium is not back into the state of Oklahoma. Whereas if you're at Tinker Federal Credit Union, they're investing their funds and profits back into Oklahoma communities as opposed to it leaving and going to New York, internationally, et cetera, right? Because those large bank conglomerates are basically international at this point, especially your JP Morgans.
Okay.
And so if people wanted to support their state, you're better off having a credit union account than you are having these larger bank accounts. And that's one solution that you could put in place moving forward in a currency reset or a currency revaluation, is having credit unions be the catalyst for growth and the lenders of last resort, meaning they loan to the people at 0 to 3% interest rates as opposed to, 7, 8, 9, 12, 22, 23% that you get out on credit cards, et cetera. And this is an idea that's come to fruition from Dr. Brown. Ellen Brown wrote this book basically looking at the banking sector and giving examples. And you now see states rolling out legislation that would support this idea to have a state bank like the Bank of North Dakota, like Florida just proposed theirs. It's called Sunshine Bank, where it's credit union based, and they would be supporting the people and the citizens of their state.
Yeah, not the private investors.
Correct.
That are global in some cases with the majority of all these larger banks.
And that ties into kind of what our discussion has been, Jenny, about gold and silver being money and constitutionally being money,
right?
Because you have these large scale banks.
Hold on one second. Okay.
Jenny is working away.
Yeah, hold on. This is such a,
What?
it's,
We,
well, we're supposed to be broadcasting on
Telegram.
and Telegram has this thing that's going on that I can't quite figure out, and it just is a mess. So anyway, please continue. I am so sorry that echoed.
You're good.
Well,
I think. Go ahead, Michael.
Well, I was just going to ask real quick: is there any talks of that public bank here in Oklahoma? Is any legislators looking at that, talking about that?
When I looked up recently, because that was one of my curiosities of how many of these states are moving towards that. I do have to say, I think Florida is leading the way a lot with the sound money movement, in a sense that they're establishing this bank. They're accepting gold and silver as payment for taxes, et cetera, starting.
Are they sincerely?
Yeah, it's starting January 1st, 2026. Basically, if you are a business operating in the state or a state entity, you have to accept gold and silver as payment for legal tender of debts, basically. And that is changing the game because that's a very large state with a lot of people. So, and then now that I saw through their legislative session through 2025 that this bank was proposed, I think it's an idea that might catch fire throughout the U.S. as we're entering into a dollar crisis, right? And that's probably a little bit more of the macro level conversation about the U.S. dollar and what's happening in the marketplace.
Well, but Jeremy has a great question because it's kind of mine too. Does it even matter in the end if they're just going to take us all into digital control grid? Our politicians in Oklahoma are actively selling us out. The state level bank might be a relative improvement within a predacious system, but the smartest people are pushing outside of that system. I mean, I think that's a great question because I've got the same question.
Well, and to maybe dovetail into that a little bit, Eric, maybe also tell everybody what actually sound money is, because I don't think a lot of people really know. Like when you say sound money, what does that actually mean in like relation to Jeremy's question?
Yeah, so sound money in the United States, well, and throughout history, has basically been gold and silver as legal tender. And so constitutionally, we've established that in basically 1789. And then in 1792, with the first Coinage Act in the United States, legal tender was or gold and silver were the payments that were made for debts. And we have always had the coinage in circulation. Paper money as a concept has a different evolution through American history. That's important. And so when we say sound, one way to think about it is actually gold and silver has a frequency that is given off. So one way a lot of people know that it's silver coinage is if you drop your coin. You'll hear a different ping or ring sound than you would if you're dropping a clad quarter of today. And so sound money movements or citizens for sound money often are advocates of gold and silver or decentralized financial systems that allow for you to operate without government intervention, basically in your life. And so gold and silver is a way to do that. And oftentimes in the investment community, it's not promoted because if you purchase gold and silver, you remove yourself from the investment system and you're operating outside of it.
Oh, for sure.
And that's how those relationships build with your local coin shops or bullion dealers, because if every paycheck you go out and you buy an ounce of gold and then you just store that at home, it's outside of the system of banking. It's outside of, everything that is functioning in the economy and the liquidity of the dollar in the economy. You can go exchange that in at any time without having to disclose any of that information, get cash to operate then within the system if you wanted to, right? So you could take your family out for dinner, etc. And
well, another aspect that I think about, like when I hear you talk about sound money, is, well, two things. So like you said, the gold and silver, but it actually, sound money, it has an actual intrinsic value.
Yep.
Where like fiat doesn't, there's no real value to fiat. And I think almost kind of the larger part of that to me, Eric, is With sound money, you know the supply. It's predictable. I mean, you know how much silver is in the ground and how much can come out. You know how much gold can come out. You know those commodity type aspects of all things that could back money in one way or another, or be money. You know pretty much what they are.
Yes, and ironically, we operated from 1792 to 1873. The United States operated on a sound money system. The crime of 1873 is often an important historical data point because we were removed from that silver standard. And last time I was on, I discussed that a little bit, but it's a key point. Thomas Jefferson and the other founders were very aware of the dangers of fractional reserve banking, of paper currency printing without backing. And so they established the unit of measure in that coinage act, which was the 371 and a quarter grains of silver, was $1. And then an eagle by law was always gold. And it was a ratio of silver, which 15-to-1 ratio. So a gold eagle was 23.7 grains. And then you had copper pennies. So you actually had a trimetallic standard that had been established. And in 1873, we removed that dollar standard from silver because we didn't remove silver from our money, but we removed that as the unit of measure. And that's where they start the linguistic verbicide and linguistic tyranny. By 1900, they established a gold dollar. Well, by law, if you go back, you couldn't have a gold dollar because it had to be silver as a unit of measure. And then today, since 1985, we've had silver eagles, which ironically is the opposite of what they were initially under the Constitution, because silver eagles had to be, if it was silver, it was $1 because it was that unit of measure. So the much of the public in our educational system, which we often discuss, does not teach these concepts. And so people have a lack of monetary education, which then puts us in the scenario that we're in, where you're in a debt-based, what we would call Keynesian economic system that is based off of boom and bust cycles. And Oklahoma's experienced that, right? You could drive an oil price down. You can drive any commodity price down because the markets are manipulated because of basically control mechanisms, which is difficult for people to understand, because when we talk about CBDCs, in a way, we're already on that type of system because most of our transactions are digital anyways through our banks. If you wanted to actually take physical delivery of all the paper that people supposedly have in their bank accounts, that bank run would be over pretty shortly, pretty quickly though.
Yeah.
Because they don't I don't think they've ever printed $37 trillion. And I think we have 330 trillion in unfunded liabilities. If you tried to actually create that much paper currency, you'd be in a world of trouble. So
yeah,
that's what's the danger of all
bad.
of it. And that's the danger of fractional reserve banking, which is something that we really need to get away from in order to reestablish our monetary system to support the growth of our economies and the people that are actually doing the work within them. It's what makes Michael's t-shirt so popular. Bitcoin, 21 million. You know how many there are.
Yeah. So Carmen, and we obviously, you can't really, say anything because we don't,
Sure. Yeah,
but
give financial advice.
Yeah, I know. But what you could do is maybe tell her how to find a place. I mean,
Sure.
some ways to ask questions or, something that would help her find a place.
What I would say is many of the large bullion dealers have now established IRA programs. In doing a lot of research on them, I would say your largest ones, your APMEX in Oklahoma City, Money Metals is in Idaho. You have SD Bullion, which is very popular. Some of them have different types of programs that you have to look into. But I would say any of those will take care of you and understand the industry that they're in. And I guess for people that maybe aren't familiar, that you could actually transfer your IRA into physical metals. That is something that's becoming increasingly popular by the day throughout the United States. And I would say that movement really probably caught on 5 years ago when we started with COVID and people started saying, oh goodness, they're printing a lot of money. What are we going to do? And so basically you could take that IRA, roll it over. You would purchase the physical metals from the bullion dealer, and then you select a depository in the United States. They're in many different states of which will store the metal. The key point I would make, and I think Michael would probably agree, is that it needs to be allocated and segregated. Please make sure if you're going to do that, that it is segregated where your name is attached to that physical metal. If you aren't able to see it or to have confirmation that they actually have it, that would be problematic. And so many of them have a 24-hour policy where you can do a video conference and actually see your metals in the location they are. Oftentimes, if you want to schedule an appointment with them, they'll allow you to go see them. But I would make sure they're allocated and segregated, because otherwise multiple people can be sold multiple pieces of metal, which is the problem that we're in right now.
Yeah.
Well, I remember.
Won't you just real quick, because you've been in an actual depository.
Yes.
Tell that little story that you told me about that depository that you were in.
Sure. So I had the pleasure of visiting Scottsdale Mint, which is one of the largest mints in the United States. Ironically, it's now moved to Casper, Wyoming, a very pro-business state. And so they have a depository called the Wyoming Reserve, which is one of the largest. It will be one of the largest in the United States, especially in the West. And so when I went up to tour, I do have a pretty solid background of monetary history and sound money movements. So the CEO and I quickly were able to have great conversation. But we went into the vault that they had built, and it's a class 3 vault, state of the art, every technology, every piece of information that you would want in someone storing your valuables. And this is a mint that basically, the International Gold Council is visiting, and there's a lot of big banks that are looking at it, right, to store their metals, because central banks have been buying a lot. So I have this grand vision of what this would look like going into this, secure facility. And there was certainly massive security throughout, and you had to basically, go through the scanner to get in. But once we walked into the vault, I told Michael, imagine a Sam's Club warehouse with the similar shelves, but just stacked with gold and silver everywhere.
Wow.
And the vision I had is oftentimes what we would have when you secure valuables in banks, where basically you have a box, right? That you have a key and everything's labeled. It was not very much like that. It was like, oh, here's a plastic tote and it has your 5 kilos of gold, which is worth an exorbitant amount of money. It's labeled, it's there, it's allocated. And that really is common in the industry. And they were very organized, very professional, and definitely one that I would entrust. But it was just ironic, that concept of, oh my goodness, look how much money can actually be stored into these vaults. And it wasn't that big, right? But that's what people fail to understand. Gold's value continues to increase as the dollar continues to depreciate in its purchasing power. And in doing so, a very small amount of gold can equate to a lot of money, or currency, we should say, in dollar terms. And so that's interesting conceptually to try to put together in your mind as you visit these places. But if you ever want to check them out, Scottsdale Mint has incredible silver products. I think they're one of the best in the world as far as what they create and what they make and the quality of it. So, and they do make it for a lot of international, basically international, in that they actually coin government minted coins throughout the world for many other governments. So there is still manufacturing in the United States. It's still alive and well. And I think that Scottsdale Mint is one that we should probably be pretty proud of, because they seem to be a go-to for a lot of people.
Interesting.
Yeah.
Well, Jeremy said, I heard the silver market was about to expand because of the way they've been driving the prices down so low and so long.
Yeah. Excellent question. I think what people need to understand is suppression of the marketplace and how it works in paper contracts. So I'll discuss a little bit of that, and then I think that will answer Jeremy's question. Paper derivative contracts in commodities are sold on the market every day. And what that means is you can log into your TIA CREF account, you can log into your TD Ameritrade account. If you have Charles Schwab, whatever that is, and if you want to trade in commodities, you can buy paper contracts, which get you exposure to silver and gold through what we would call ETFs, electronically traded funds.
Yeah.
The most popular for silver, well, there's two primarily, I would say, SLV and the Sprott's Silver Fund, which is Eric Sprott. He's a billionaire that basically they purchase silver and people can store it. When you go on to the exchange to purchase paper contracts of silver, you can do so, and you're never really taking delivery of it. And that's somewhat how we've gotten into the mess that we're in, and we see it actually starting to break in recent weeks. I actually sent Ginny a link of London being in panic and the India short squeeze that's happening right now. But basically, you would buy a contract. If you buy a silver contract that's in SLV, that's fine. The price of silver is going up. You have that contract price. And as it goes up, you can then sell if it's higher, and you might make a little money, but it's always in that paper exchange. It's basically the payout is in U.S. Federal Reserve note terms, not in actual silver. Well, the Hunts brothers in 1980 squeezed silver, and that was a big story, and a lot of people know that history. And then in 2011, again, we had silver breach $50 an ounce. And what seems to be the case of what's happening is people never took delivery of the physical metals in the past. In the last year, that has started to increase exponentially, where people are taking delivery of the physical metals. And that has actually happened more so over in London right now than in the United States, but it's starting to happen in our market. Our market is the COMEX, London is the LBMA. And you can go look at those charts and see the draining of their vaults. So basically, this is the irony of it, in order to take a silver contract for delivery, you actually have to have 5,000 ounces of silver, which is a lot of silver. Michael, I'm sure, can attest. Because at $50 an ounce, right, that's a substantial amount of many people's wealth that would be needed to actually take physical delivery. And they make it very difficult.
Wait, hold on again, Mr. Magoo here.
Yeah.
Why 5,000 ounces?
Just determined by the marketplace. They do adjust that periodically, but it's always been basically 5,000. One reason I would give you is it keeps the small time person out of ever taking delivery, because
on purpose.
That's right, on purpose. Because if you do take delivery of that contract, they have to deliver the physical metals to you.
Right.
And so that prevents that exchange of happening. Well, now you do have, not only do you have central banks that are interested in purchasing silver, we know Russia has already done so. You have family hedge funds that are entertaining actually getting invested in it and having physical delivery. You have Goldman Sachs coming out and saying the 60-40 portfolio is basically imploded. It should be 20% allocation to gold, which is way more than has ever been the case. And I'm sure Michael can attest more to that than anybody else. But, when you think about the scale and scope of this marketplace, it's not that big. And the problem with that is, if you have all of the contracts that have been sold into the market, if all of those participants say they want to take delivery, the marketplace does not have that much silver available for delivery. And that will cause
Well, how can
chaos.
that be? How can you oversell?
Yeah. Welcome to fractional reserve banking.
Well,
that's horrifying.
It's a simple formula. It's based on time. So you sell now, you short it, you sell now, which forces the price down because you're artificially putting more things into the market. So you're selling, so you're forcing the price down. Then you fast forward a month or whatever, and you buy it back. So when you buy it back, it stays. Now it's been suppressed and it stays kind of at this level. So and it's funny you mentioned the LBMA. Kind of what I've seen, Eric, is the larger, more sophisticated banks and investment people, they're selling here in the United States on the COMEX, they're shorting here, and then they're buying long over it on the LBMA, and taking that long position over there, which the LBMA is in major crisis because they're supposed to deliver, Jenny, on these contracts. So they've suppressed the price down. They want to take delivery, and they know that the LBMA doesn't. They don't have the silver over in London. They're already on like an 8 or 9 week delay. They're supposed to deliver the next day after your contract is, after your contract is done.
It's going to cause a substantial problem, and it's part of what I think you're going to see is that paper market break. If you actually go, and I know we've talked about the U.S. debt clock, if you go to the U.S. debt clock and you look in the bottom right-hand corner, it will show you the amount of paper contracts that have been sold for every 1 physical ounce of silver. And for your listeners to understand, I think right now it's at 362 paper contracts. So just to give you some context, right, it would be like me selling my farm to 362 people and then waiting patiently, and nobody really wants to move in yet, but then something happens in the world and everybody wants to move in all at once.
Right.
And I have them lined out of my gate. How do you manage that situation? Because the same thing's going to happen in the paper silver market is those individuals that want the physical metal eventually are going to take delivery. And if all 362 of them say they want delivery of that 1 physical ounce at once, what is your option then to fulfill those contractual obligations?
Yeah.
That's why I encourage people to read the prospectus of those electronically traded funds. They are permitted to settle with you in paper. They don't have to give you the physical metal. So actually you're buying it.
So bad.
I know. And nobody reads the fine print, right? So you're buying this contract. It's not that you can't make money, right? Traders make it all the time. You can short, you can go long. You can make short amounts of money through it, just buying and selling. But if you actually wanted exposure to physical metals, what a lot of people don't get is, like, especially through SLV, you really aren't exposed to physical metals because more than likely they're not going to deliver that to you.
Okay, so there are a couple of good questions on here. First of all, I want to put up Jeremy's comment because I think it's true. I mean, it's just a transfer of wealth, and this is what we've got.
Well, and I want to address Jeremy's other comment from earlier about the crypto. I think, Jeremy, what they're going to do to really get everybody on board with the digital side, because I think most people are not going to just happily go into stable coins and use all that. I mean, no one I know, I mean, especially me, I do not want to do that.
Me, they're not happening.
I think they're going to highly incentivize that side with treasuries. They're going to back the treasuries with gold and silver and other commodities in order to make you, they're going to devalue the dollar, the physical fiat dollar, so much that you're going to have to switch to have any kind of value. So in the beginning, I think they are going to somewhat back those in one way or another to get people to move over to that system. And yeah, it is a total control, and I'm not excited about it, but I see that's kind of how they're going to do it, Eric.
Yeah, I think I had mentioned before, I do believe in some capacity, President Trump is going to use an executive order to bypass the Federal Reserve, which I do believe he can do, especially in a government shutdown scenario. And in doing so, then he can allow the USA. I talked about the distinction between the United States and the USA before, but the United States of America Treasury to create their own currency that is backed by those assets. But to Michael's point, the amount of liquidity that you need and the size of the marketplace that has grown, you have to have alternative options. And crypto has been a solution for that, for people to move into in that stable coin ledger. And yeah, while people may not like that, I think it's trying to ease the transition as much as possible, because you couldn't just go. I think it'd be very, very difficult to go straight back to just gold and silver as legal tender and think that you're going to be able to function appropriately. It's just, it's.
I mean, even in your opinion, with, let's say, the goldbacks really come into, really.
So stop. You need to say what that is.
Okay. So yeah, goldback.
Stop. What is it?
Okay.
It's a Pokemon card. What does that have to do with anything?
Card.
No, it's way better. It's actual gold in the hands of the people. So started in 2019 in the state of Utah. Yeah.
It's like a dollar bill, but this is technology. This is what is this? This is a half. So this is what 120, 1/2000
of an ounce of gold is actually within the gold
No,
back.
I want that.
I will definitely get you some, Jenny. You need to have them. So it's a very cool concept, and it's catching on.
Hold on one second, because David and I were talking about it this the other day, because it's like, okay, so you have your round of gold, and all you need is like a loaf of bread or something, and you take it to Walmart.
Yes.
Hey, Eric's got the answer here. Eric's got the answer.
Yeah, so gold backs are certainly a solution. We launched in Oklahoma. These were launched on August 1st. Basically, they are the smallest fractional size of gold that you can obtain. So 1/2000th of an ounce is the one that Michael had in front of him. And
well, what did you have?
this is a special edition $3 gold back. So I actually am able to be a distributor for them. And the cool part is about signing up merchants. And so how does this work? It's exactly to your point, Jenny. You take a $half gold back. You can go to goldback.com, look on their website. They have an app that calculates. Gold backs are based off of the price of gold on the spot market. They are fungible. And so 1/2000th is a half gold back. 1/1000th of an ounce is a $1 gold back. A $2 gold back is 1/500th of an ounce of gold, all the way up to $100.
No way, that's so cool.
Yeah, $100 gold back is 1/10th of an ounce of gold, which is pretty substantial amount of U.S. dollar or U.S. Federal Reserve notes at this point. But it allows you to actually use it for commerce. So I lived in Utah for 2 years, have actually been out there, kind of toured their facility, but they probably have, we'll say, almost 1,000 vendors that accept gold backs. All your local mom and pop restaurants, yes. And it's really catching on in Oklahoma. So if you go to their website, it'll show you who accepts gold backs as payment. So basically, you could take your paycheck, you could buy gold backs, you could set them in your safe, and then you want to go get a pizza at a local pizza joint in Oklahoma that accepts gold backs. Just like your MasterCard or Visa, you just take your physical gold backs in. They use the gold back calculator that's on their website, and they have an app for it. It will say your bill's $50. You type in $50, it'll tell you how many gold backs to give based off the gold price, and then it'll give you the change that the merchant gives back to you in US dollars.
So why aren't we doing that instead of all the BS we're doing right now and trying to play with this CBDC and all of that? This sounds like, we pretty much got this worked out. Why is this a problem?
Well, this is a major solution for what would be termed paper currency, because it's actually not paper currency. The gold's infused into the actual bills. And that is really unique. It would be so cool if the United States actually did something like that with theirs, because it removes the ability to have fractional reserve banking.
Yeah.
The actual gold and silver are in the currency. You can't play games with it. If you melt these down, there will be 1/2000th of an ounce of gold within whatever you've melted. And that as a concept really solves a lot of problems. So they're currently operating in 8 states. They're in Utah, Wyoming, South Dakota, Oklahoma, New Hampshire, Florida, Nevada. And it looks like Arizona is coming online, and Idaho. And you can see it's the western states primarily. Florida and New Hampshire have jumped on board. I always say
New Hampshire for sure. I mean,
of course, right?
On.
That's why.
And it's also cool, Eric, that each one of those is designed by Oklahoma artists. Like,
yes,
the ones in Oklahoma are literally
all female. So they decided to do all female depictions on gold backs, because oftentimes on our currency, government sanctioned currency, it's all male figures. So gold backs as an alternative.
And girls are cool.
Yeah. They do all females, all local artists in every state. They've done this, and they're based off of your economies. So it's hard to see that because of the glare.
Yeah, but that is the coolest thing. Well, hold on a second. There are a couple more questions, and people have had good questions that I've learned something for. Eric, is it true that silver future price is basically the New York Stock Exchange lease price, And the silver spot price is the physical London price.
Both of those. So I would say that the physical spot price is different from the future price. And what we actually have seen, and Michael might be able to speak better to this, we've seen a decoupling of that recently.
It's flipped.
There's backwardation happening, which is pretty rare in the marketplace.
Where it's backwardation?
Yeah, that would be your economic term. Yeah, where the physical price.
Did you just make that up, Eric?
Yeah, it just means you would think that the future price is more expensive than the current spot price, because in the future you have storage, you have transportation, you have fees.
Say it again.
Okay, there's two prices. There's a future price, and there's the spot price, which is the current price right now.
Okay.
So when Eric said there's backwardation, normally the future price is always more than the spot price right now, because you have in the future they're saying, hey, there's fees associated with, there's transportation, there's all kinds of expenses. So it's going to be more in the future than it is right now. Well, backwardation means people are paying more for the silver now than the future price, because they want it. They're taking the delivery. Yep. You know, they don't want the paper side of it in the future. They want the physical now, so they're paying more now, so the price is more now at spot than it is even in the future. That's what that means.
Yeah, and the issue with that is that backwardation has not happened very often in the marketplace. So this is a anomaly that we're living through right now, and the more that separates, the more dangerous it becomes for those that are playing the paper game in the electronically traded funds, because they can implode really fast. And if people need to learn about that, just watch the movie Margin Call. It's absolutely awesome. Yeah. It will lay out how this happens in the basically on the side of the banks, on the side of the investors, of how they can be put in very precarious contract situations that they can't fulfill, and then what happens to the marketplace.
Yeah. Well, and also just another thing to think about, Jenny, which is really, it hasn't really been an issue, I think, until now. But you look at like the entire green energy side of everything, which, you know, we're not happy about, but that technology does exist in solar panels and, you know, all the electrical stuff. They have to have massive amounts of silver in order to, you know, produce solar panels and all the stuff that goes along with it.
Computer chips as well.
So what do you think's going to happen if, you know, a Tesla or like China or someone, you know, that says, hey, we're going to go ahead and we're going to, while these prices are paper suppressed, you know, the price is way down here, we're going to put in a huge order for silver, and then we're actually just going to take delivery of it, you know, 3 months from now, 2 months from now, when the delivery schedule comes up. You know, that's going to massively interrupt the system, because nobody does that, but someone that's looking forward, that needs a whole lot of silver in some capacity, they could literally completely just discombobulate this whole system by one major player doing that. I mean, that's how fragile the whole paper side is on this.
That's actually the concern that's happening now. And there was a Bloomberg article that came out, I think 4 days ago, about London being in panic because what the estimates are is there are 150 million ounces of silver, physical silver, that they need to cover their short positions to deliver those contracts. Well, India also, they basically have a large population and they certainly like silver and gold. India actually stopped the trading of their ETFs, their electronically traded funds, because the market was too volatile for them to be able to estimate what the price range would be. And that in and of itself is a big deal. Now, if those nations want to take delivery of basically physical silver, and there are certain delivery months, the next one in the United States would be in December. I think right now there's 110 million ounces of physical silver that may be taken for delivery. That would break, if that much was taken in December, it would break the COMEX. It would break.
So hold on a second. Because I think most people understand that. And you know what? We always judge it. I always judge it on me. If I understand it, then everybody else.
Good.
So what would happen if that happened? I mean,
Yeah.
what would happen if you broke the COMEX?
So I actually think we're gonna probably live through it. I think you're gonna start seeing I know this is I can get myself in trouble for trying to predict, but I think you're gonna see days where silver, the volatility is growing every day, right? They just pushed the price down $4 in a day. You're gonna start seeing $10
really?
swings. Yeah. So if you have a $10 swing up, they have what's called Rule 589, which can stop trading, right? You're
Yes.
going to see multiple days where silver is going to start to go if what Michael and I are saying comes to fruition, where people want the physical metals. And basically, the marketplace is going to have to suspend trading to try to discover what the true price is of the metals. At that point, that's where
Wow.
I see the federal government coming into play, and they have to have a solution, whether it's the revaluing of gold and silver, whether it's the backing of our currency with gold and silver. They're going to have a solution of how this plays out so that the price point is actually reflective of the value of those metals. And to give people perspective, only 0.5% of the population in the United States has physical metals.
0.5%?
One
Yeah,
half
not
of
hard.
1%.
Not many people have any physical.
Yeah,
whatsoever.
they don't have exposure to it. So why that matters, if one university endowment fund, basically, if one university endowment fund wants physical silver, Harvard could drain the entire marketplace. It's somewhat scary to think about, but it's also realistic in that returning back to gold and silver, returning back to sound money principles would be advantageous for the people in the end. I always like to give books as examples, but this is The Big Silver Short. Chris Marcus wrote about this. He was a trader. He just interviewed basically 15 of the world's top silver experts, asking them how this would play out. And they're very aware of how manipulated the price has been since basically the 70s of silver.
So let's throw this one up. Jeremy says, it's not supposed to be manageable. Chaos theory seems relevant here. They collapsed to replace this time, though, right? To finish integrating us into the new tech currency paradigm?
Certainly a possible outcome. I'm always a inherent optimist. So I like to be more positive. I think that the law and order side of things matters tremendously. And I think in order to stabilize our economic system with all what's gone on through this Federal Reserve third central bank experience that we've had, you could see change very quickly happen where people do start to understand what is money and the distinctions between it, and have alternative options, whether it's the USA currency that you have, whether it's the crypto world that they can be decentralized in and operating in, whether it's use of gold backs through their states as a means of commerce. I think you're going to have a lot of options available that people will be able to run to as this current system starts to collapse. And the truth is, every paper currency, we have a fiat currency. It's backed by nothing.
Right.
Every one of them in human history has failed. So inevitably, this Federal Reserve one will fail. We don't know a time or a date of that, but we seem to be coming closer and closer to an end game.
Okay, well, I had to put this up.
And I wanna before you hit that comment, I want to just put something in perspective.
There you go, Eric.
Yeah. Down the rabbit hole. Thanks, Jeremy.
Jenny, like, do you know what the supply of silver, like every year, is like 800 million ounces. That's how much globally, basically, that can come out of the ground. Okay. So,
So hold on. Let me give me a second.
So
we are still finding silver veins.
Yes.
Oh yeah, there's silver mines that are. I mean, Mexico has so much silver, it's insane. They've got mines that are closed that they could reopen, and they
Oh.
probably will once silver hits a certain price. But basically,
so will the USA.
Yeah. So 800. We know there's 800 million basically ounces of silver that comes out of the ground every year.
Okay.
So when you look at the paper side of this, just to put this in kind of comparison here, on the average day, there's 50,000 to 100,000 contracts, but we'll just stay on the 50,000 side. There's 50,000 contracts that are traded. Well, that 50,000, each contract, like Eric said, is 5,000 ounces. That's 285 million ounces every day that's traded artificially.
Wow.
You know, that silver doesn't actually trade hands. Like if Eric sells it and I buy it, I don't get it. It's just
Right.
the paper side.
Correct.
So when every day you have 50,000 contracts trading, you know, basically a quarter of the entire supply of the entire year, you can see how one little person that or country that actually takes delivery of some serious amount of these contracts is going to just massively, because the silver's not there. I mean, it's literally not there. Because unlike gold, like all the silver that goes into electronics and all that stuff, there's no market that goes and strips that silver back out of all those things when you throw, you know, your speakers out or this electronic device, or, you know, that market's not, it may, you know, if silver gets high enough, that market may come around.
Yeah,
but right now, a lot of that silver, once it's used, you know, it's gone. So, you know, where gold doesn't, you know, we retain our gold that's, you know, been mined through time. But, you know, silver.
Yeah, gold has strictly been a monetary metal. I mean, even in jewelry, it's viewed more monetarily, right? Because whereas silver has that industrial side.
Yeah, but I mean, there are, and I'm trying to think of what there are, but there are some industrial processes that use gold.
100%. It's just not as utilized as silver.
Oh yeah, for sure.
100%. In like the military industrial complex, like it's a necessary commodity that you can't function without. And so one point I would make, just because I think it's important for your viewers to understand, what's happening in the United States isn't always reflective of what's happening globally. So to give you an example, the Royal Mint, which is one of your largest bullion dealers in the world, which is Great Britain, basically I logged on to the Royal Mint, I want to say 2 days ago, and I was put into a queue where I was number 394. And it took me 20 minutes to even get access to the website. When I got onto the website, the silver products that were available were essentially non-existent. If they were months out in delivery. I believe that will come stateside. And so for those viewers that you have, again, I'm not giving any financial advice, but maybe some exposure to the metals would be advantageous, so you're not one sitting in the line outside of the local coin shop or trying to get on these websites and take delivery. Because even if you log into AppMex, it's showing delivery of kilo bars and 100-ounce bars I saw out as far as December 19th. Well, a lot can happen between October 22nd and December 19th. And so having that exposure, I think, would be advantageous. And it's just something that's a store of value for people. Very difficult.
Becky likes that mix too.
Yeah, they're one of the largest dealers in actually the world, one of the largest bullion dealers.
So Earl's daughter she said it's not a pokey card, it's way better. Goldbacks upgrade Pikachu to Elon Musk.
For sure. Goldbacks are actually really, really cool. What I would tell people is go on their website, check it out. I actually have a website that I can, if people are interested in purchasing Goldbacks, because my conversations have been more with local businesses, trying to get them to become merchants. Because when they do, they do give they have actually give these $3 Goldbacks, which there's only I think 4,000 of these ever made. So they have numismatic value moving forward, which would be your collector value. But
interesting.
It's really fun to go on their website. And for individuals like myself, when I travel, because Goldbacks are throughout the US, you can sign up as a merchant anywhere. If you accept them, you accept them. You just agree to the merchant terms. So I like to travel with them, give them as tips in restaurants and or use them at certain merchants just to support them, because they usually are pretty pumped when you pay in gold backs. It's definitely an alternative.
Well, and also, Eric, you're a dealer for gold backs, but they do have a premium, but it's just to make them, basically.
That's right.
But you don't make any money on gold back. I mean, the commission you make is so negligible, it wouldn't make a dent in anything.
A few pennies, it's life-changing for me. There's very little on the wholesale premium side of, it's really about getting them into circulation. That is actually the purpose of this option as an alternative. And so we try to just promote, hey, utilize them, get them. It's hard because you just want to hold them and you don't want to spend them because, well, bad money oftentimes makes you save good money. So the good money is what you hoard. It's those Bitcoiners like Michael. He's just hoarding his Bitcoin. They're not going to spend their Bitcoin. They're going to spend their fiat dollars. So that's a little bit of the problem that you run into. But I think with the growth of them happening everywhere, it's really starting to catch on, and you'll see them in more and more states.
Why? Yeah. I like that idea. I mean, I'd like to explore that for myself for sure. So let me ask you this. There are two questions I want, because we've kind of slowed down on questions. So there are two questions I want to ask. So Eric, you and I were having a conversation one day, just kept going on and on and on. And you finally lost me at some point, but you were explaining how I'm trying to get it right, so you'll forgive me. You were explaining that we could end up with an entirely new monetary system in which only credit unions would be used.
Yeah.
Okay, you know what I'm talking about, right?
I do. So
okay, so I'm just not getting anywhere. So go.
Basically, the point there is, we're going through a monetary reset, and those take time. Through a monetary reset, there's certainly going to be winners and losers. Banks, because of the amount of leverage that they've put on their books, because of just like 2008 with mortgage-backed securities and the crisis we went through with the housing market bubble, their exposure is substantial. And I'm not convinced that many of those large banks are going to survive what happens through the financial reset. And the solution, though, would be, one, credit unions, their balance sheets are oftentimes a lot better. You can see those. They're open to the public. Whereas some other times, depending on the banking laws, you can't find as much information from private banks that exist. And so what I basically was saying is, credit unions, I think, are better options for banking for people long term. Because what I think will happen with the reset is, and it's important to understand the history, we call them the treasury notes that Abraham Lincoln started with the paper currency. So Abraham Lincoln printed notes, the U.S. Treasury basically printed greenbacks, and they were green in their color on the backside. They had a red certificate on them. That was the distinction. So if you're ever at a trade show or looking at paper currencies, if you have a red stamp on the U.S. Treasury dollar, basically that's the distinction. Blue was silver, gold was gold. Green is your Federal Reserve notes that we have in our pockets today, right? And that's the stamp that's put on them. So red certificates is often how they're referred when Lincoln basically started printing currency. When Lincoln did that, there was no interest on that money. There was no foreign government involvement. There was no foreign private investors in that money. And central banking history, if you read it, why Thomas Jefferson didn't review the first national bank was it was owned by 75% of foreigners. So it wasn't advantageous. Why the second didn't get basically approved, Andrew Jackson, great story there, right?
Yeah.
Den of Vipers.
Love the Andrew Jackson story.
And then you fast forward, 1913, we formed our own. Well, that's a private bank corporation. That is the Federal Reserve note.
Right.
Is it owned by we the people? No. So if you go back to a
No.
USA Treasury dollar or Treasury currency, which is what we could do, and you start printing that money into circulation, one, you don't have interest attached to it. Everybody always talks about how much interest the U.S. government, we almost pay $1 trillion or whatever in interest a year on the debt that we owe. Well, who do we owe it to, right?
Private people.
That's right. So, and that's a problem. Like as
private people.
Yeah.
Not we the people, the private we
correct.
the people.
We're trying. You try to shift that back. If they do so, and it's why I think the Sovereign Wealth Fund was formed, all of those assets become the backing for the new currencies printing. And then usury as, you know, a concept doesn't have to be happening, and the people can be supported through the Sovereign Wealth Fund and the asset backing of the new currency, which then will be provided to these credit unions, etc., for distribution. And
okay, so when you said the word, and Jeremy said it too, and I hate to be such a bonehead.
Yeah.
Usury.
Yes. So conceptually, usury is basically charging of interest on currency or money that is above what would be an appropriate, we'll say, inflationary growth model to basically where you enslave people. You can't get out of it. So credit card usury, they've had debates about this in congressional sessions. When you charge 23% to a person, once they get beyond their 0% interest rate, it's essentially usury. The cycle of getting out of it is so difficult.
Yeah.
We've had those conversations with student loans and
and credit card debt.
And credit card debt.
Yeah.
That concept,
right.
Well, from a belief system, even in Christianity, is usury is viewed negatively.
Yeah.
Like, that's not something that we should participate in. And so it has hurt a lot of people allowing private individuals to do such things where there's no regulation of it. And I think one way to circumvent it is by having the U.S. Treasury or the USA Treasury actually print their own currency. If they did it like gold backs, it would solve everything because it's like infused in it, and them distribute it, allow the states to have some management of it. And if you do that through state public banks, like Dr. Brown has stated, that would prevent that usury, and then we the people are provided opportunity to get loans, to build businesses, and what will actually happen is the value of your currency will appreciate, not depreciate.
Correct.
Yeah, and I think that is the most important part of that whole aspect, Eric, is as we've massively increased technology, all this stuff, the value of our dollar has decreased, 99% since we brought in the private Federal Reserve banking system, took ourselves off the gold standard, all those aspects, and what do? We just keep buying, we just keep consuming, we just keep paying more. And I mean, there's just no financial education. If we printed our own money and I mean, everyone in the world would be investing in the United States because our money would have real value and it would continue to go. You'd have checking accounts where you're making 8, 9, 10% interest because the value of the money is so strong.
Absolutely. And that was the purpose when Thomas Jefferson established the unit of measure. They melted the Spanish mill dollars down and all the other coinage in the world. Right. And then they established it. Why? Because they wanted the United States to be the world reserve coinage and establish the unit of measure that was accepted throughout. And in doing so, you actually also liberate other economies. Because if you're somebody overseas, basically one of the problems they would run into is if you print paper currency, right? And you are bringing product into the United States and you have a discrepancy or an issue with a merchant in the United States, well, you're going to settle that in a court system. What solved that issue was many times, if you're international, you never wanted the paper currency of the nation. Gold and silver were already internationally recognized.
Yeah.
And so that made those types of conversations a lot easier, and oftentimes didn't end in litigation where you didn't have this alternative system of paper that they could basically devalue exponentially by printing it into the oblivion. And we have certainly lived that. I tell people it's very important and I hope your viewers understand, even with gold's price, even with Bitcoin's price, when gold is at $4,300 an ounce, everybody on the internet, everybody will say gold's at an all-time high. The view of which you should view that is actually your dollar purchasing power is at an all-time low.
Yeah.
I was going to say,
Yes,
100%.
the gold is not changing. The Bitcoin's not changing.
yeah,
The dollar purchasing power is what is changing. And that conceptually is often hard, and we certainly don't teach that in our educational system, where people understand and they don't grasp why they may be making more money on paper in their actual job day to day. They may make six figures, right? And it's like, well, if your parents made six figures, they were extremely wealthy. Well, their purchase power just doesn't go nearly as far.
Well, there are several comments on here, and then I had another one too. Jeremy asks, could the economic, particularly small business layer of a town elect to push their cash profits into gold backs to disperse as change into the residential population, with the understanding that they'd spend them within the same layer, and that's replace the dollars in their community with gold? That's actually kind of a brilliant idea.
So you actually do have that happening in small communities in Utah. It's essentially
really?
It's a way to short the US dollar, which is very hard to do. But that's what people have done. And so ironically, the dollar value is going down, gold is going up. So even if you're storing your gold backs, they're increasing in their purchasing power as the dollar is decreasing in its purchasing power. Yeah. So that's a great option.
Wow, that's very interesting. I would not have even thought about it.
Tell Jeremy I'm all ears if he wants to figure out how to do that in our communities. It's a tough conversation with merchants. It's difficult for them to understand conceptually why they would want this option.
Well, yeah, because when you think about it, we have been propagandized and gaslit about the American dollar for years, just like we have been about so many other things. And when that happens, it's so very hard for people to see an alternative because their brains don't, they've been moved away from those alternatives. So it's very hard for them to see them now. It's the same thing we're going through, honestly, with pharma, big pharma and the whole, movement to become more holistic, and with big government, and seeing what they've done. It's all of this stuff. Seems to kind of all be rolling downhill, and that snowball is getting bigger. So Tara asks, would it be safe to say our money would be safer in a credit union than in a larger bank? I'm new to this. I'm learning. You're just like me, Tara.
Yeah, what I would say is a credit union's purpose is different than a bank's.
Yeah.
And I'm sure there are plenty of local banks in Oklahoma that have great balance sheets, that really care about their communities tremendously, that have reserve assets to cover any type of issues. But what I would say is your investment in your own financial education is probably one of the most important things that you can do. And so I would research heavily where you are banking, ask tough questions, and then find solutions that best fit for your family. What I would say about credit unions is they do invest back into your community. If you're an advocate of that, then I think it's a little bit more advantageous. They're also not as leveraged in many of the other products as you would see in the big banks. There's 8 big bullion banks that basically have manipulated the price of metals and the price of many commodities, really, if you want to look at it from the whole, at the whole system. Those I would be very, very careful about leaving substantial amounts. And I don't like I'm not trying to fear people into understanding, but even after the 2008 crisis, they changed the law. They can do federal bail-ins. It's on the books.
Yeah.
Yes.
And I know that people have reiterated that, but it's important that people understand. Yeah, you might have insurance, FDIC, but what is the FDIC? It's also a corporation. It's a private corp. It's not. It's federally backed, but it's a private corporation. For every $100 that the FDIC has insured, they only have $1.14 in reserves.
Yeah.
Yeah.
Well,
You know?
and remember, Jenny, when we did that one podcast on money, I played that video from the FDIC where they're laughing. They're saying, "Oh, the public, they never know. If they knew what we knew, you know, they'd be going crazy." You know, so
Yeah,
for them, it's just a smoke and mirrors game. But yeah, Eric, so when you put your money in a bank, in a regular commercial bank, that's not your money anymore.
correct.
And you're just the beneficial owner of some capacity of that, but it's not your money. If you put it in a credit union, is it still your money? Do you have the ability? I mean, is it still? I mean, it's not in your custody.
Yeah, that's a good question.
Still your money.
Well, I think that's part of the larger question of all of the banking concepts is, are you actually a creditor upon depositing any funds into anybody else's account that's not yours? That when I say not yours, be your own central bank is my point.
Yeah.
If you can be your own central bank, that's a very different way to live than relying on another to bank for you. And it's fascinating, the psychology of that. I mean, you know, a lot of people, my sister-in-law was yelling at me the other day about, well, what do I do if I want to sell my gold or sell my silver? Like, where do I go? Like, do I have to call? I can just call my financial advisor and they can send me a check. And I'm like, or you could just go to your local coin shop and give them the coin and they'll give you cash. Like, it's not, but it's hard for people to really get behind relying on themselves.
Well, and I will say this, because, you know, I could do that and I have a comfort level with doing that, but here's where I don't have a comfort level. And we'll get to some of these questions here in a second. When I go sell silver, I don't sell gold, but when I go sell silver, I always feel like I'm getting screwed over on the price. I mean, I'm never not, I mean, I'll look up the price of it before I walk in. And a lot of the times I'll sell, because I was in the jewelry making business for a lot of years and I have a bunch of junk silver, you know, that came from stuff that I made or whatever. And I sell that and I always get this crappy price for it. And I'm like, you know, wait a minute, it's silver. It still spends, bud. I mean, it's the same thing. So I honestly feel like there are some places that are going to screw you a little bit on your price and try to make a little bit more for themselves. And that's what makes me uncomfortable, because I'm not sure how to counter that.
Sure. Yeah, I think that certainly puts a black eye on the gold and silver industry when local coin shops exploit individuals that aren't aware of how the industry functions. What I would say is, now today with technology and the availability of information, I mean, you could ask those questions. You can look them up online. There are entire YouTube channels that talk about what the spread is for the day, what buyback prices are nationally for the day, where you can almost see what the wholesalers are buying and selling for. And then you can take that. What I would say is, if you have a relationship with your local coin shop, you can take that and say, hey, this can you get to where this is at? The problem they're running into now is liquidity. A lot of these coin shops, when gold's at 4,000 an ounce and you take in 10 ounces, that's $40,000.
Yeah,
it's a lot to circulate through, right?
Yeah.
And that's also an issue from the banking side, because transactions over $10,000 require reporting requirements. So if they're not fully operating outside with cash reserves and able to absorb that and flip it quickly, it can become pretty cumbersome, and you're definitely speculating a lot, because like today, I don't know what silver's at right now, but I know yesterday it got hammered. It was at almost $54 an ounce, and we were down at 47.
I mean, it was, you could tell it was a very artificial getting.
And what happened there, so people understand, they sold 8.6 million ounces of paper silver onto the market yesterday to drive the price down. And a point I want to make. Okay, the CFTC, which is the government agency that's supposed to regulate this, they're not operating right now. So you don't have any data.
That's right.
Yeah,
Government shutdown, Michael, and all.
This is the point. you don't have any data from the CFTC right now.
Wow.
And then the CME, the Commodities and Metal Exchange, is a private entity that we've somewhat entrusted that data. But if you looked yesterday, what the CME reported and what was actually going on, it did not align. And I was my poor wife, I was telling my wife, it doesn't make sense. And she's like, I don't really care, Eric. But this decoupling's there, and we don't have actually a way to know what the true price is right now because these entities aren't operating with the federal government shutdown. And then you couple that with everything happening, Australia, London, India, China, what their sell prices of silver are, the lines that are outside of their bullion deals. I think a lot of people are asking a lot more questions about what is this marketplace truly doing right now. And I think we're going to see it play out in pretty short order.
Yeah. Well, because if you do have some type of real meltdown, all those exchanges, which are basically aggregators, global aggregators, they're the ones that kind of average all those prices and say, yeah, here's kind of what globally we see silver's worth. They're all going to be shut down. So you're not going to know what the price of any of that stuff is, right, until the dust clears, which who knows how that whole process is going to go, Eric.
Oh, yeah. It's fascinating to think about. But also worrisome in a way, right? Like, because the excitement of it
fascinating to think about losing all of your money. Yeah, that's fascinating to think about, Eric.
Here's what I would say. One, I'm more picky about terminology, but what we have in the bank is not money. It's currency.
Yeah, for sure.
Yeah, yes, we call it money, and we shouldn't call it money because it's not money.
And that's the distinction we need to change in the educational system. We have to teach our children and the public what is money and what are the principles that make something money, right? Intrinsic value, fungible, you have all these concepts, unit of measure that you need in order to actually have something be money. Our current currency is not. So no one's going to really technically lose money. They're going to lose their fiat currency. And they're going to wish they had money, which is why I think it's important to have some exposure to it. And if Goldman Sachs is telling you that 20% of your portfolio should be in gold, Goldman Sachs has already stockpiled enough gold that they're ready for whatever's coming. And that's where I think it's important. These central banks have been buying gold hand over fist for the past 4 or 5 years.
Which, again, that's going to just put them in the driver's seat again, so that they can manipulate the price. And those of us who, it's just
tough.
Well, and another major aspect of that money, which I think just the everyday person has no idea about, Eric, is with gold and silver or with real money, there is zero counterparty risk.
That's right.
So if the bank fails, it doesn't matter. If this company does this, it doesn't matter. If this country does this, or, if whatever cog in the wheel fails along the way, it has no effect on your actual money because there's no counterparty there.
Yeah.
Yeah. That's a good point.
Which is why gold backs are cool.
Well, and then John has another, our friend John Stanley has another, investing. One can buy gold and silver as an investment and not get taxed like those who invest in land and get taxed for their investment. So he makes a really good, point on that. That is a huge point.
Again, outside of the system, that's always an option.
So Adam says, last I checked, the FDIC has less than 150 billion available with all the failed banks in the past 6 years.
That'll help us sleep at night, Adam. It's so much.
What? And I think the FDIC literally almost got wiped out when the two California banks, First Republic and Silicon Valley, or whoever that other bank was, when they went out and they went ahead and paid everybody. Not just, they paid above the 250.
Well, wait. The feds paid it out. The bank didn't.
No, not the bank, the FDIC.
Exactly. They used because that's not the important part of the story, I don't think, Michael. I think the important part of that story was they used our tax dollars to do that, which is completely and utterly wrong. That's why any bank should have enough money in reserve to be able to fund any run, any issue that comes up, so that we're not.
Jenny, don't say that. Jenny.
Don't you
Don't
dare
tell
laugh,
those
because
banks.
you know that that's the way it's supposed to be.
Well, to help absorb that a little bit, the 08 bubble was what, 800 billion in the bailout, so the FDIC has 150.
Yeah.
That and the amount of printing since 2008, the M2 money supply, if you go look at it, it won't help you sleep at night.
Okay, explain M2, because I keep forgetting.
Your
I know.
M2 money supply is the amount of currency that the Federal Reserve has in circulation. The amount of printing they've done in the trillions of dollars of paper currency that is currently in the marketplace.
Okay,
so you'll
M2
see bumps.
is.
Yeah, like in 08, you'll see they had to print basically $800 billion to bail out all the banks and
right.
auto manufacturers, et cetera.
Yes.
COVID, we printed all the, you'll see those flips up. The M2 money supply right now is actually the highest it's ever been. So it's not like it stopped. All that they did was what we would term quantitative easing, QE.
Yeah, I hate that term. I just despise it.
They just print and they continue to print and then they band-aid over it. And if you continue to print, it's simple supply and demand principles. The more supply you have of something and it's readily available, more than likely the demand for that, right, starts to decrease. And so that's why gold, Bitcoin, all of these other concepts are awesome.
Well, let's add, because it's already 1:31, so we're gonna have to start winding it down. And so here's how I want to wind it down. A lot of us, especially since Trump brought on his own stable coin, which he's selling to make himself money while he's president, and so many people who love the man instead of the presidency will tell you, but he deserves that because he's had to put so much money out, because he's been. And yes, the man, I agree. The man has been sued more times than, I mean, it's ridiculous how many times the left has tried to bring him down by suing him or bring a lawsuit against him. And I get that. But still in all, again, like my mama used to say, two wrongs don't make a right, right? So we have Trump literally pushing CBDC without saying he's pushing CBDC. And so if he's going to make money off of this coin and his family's going to make money off of this coin, why would he want to get gold back as the standard when he's got a way to do this other thing? I mean, now I'm not trying to be mean or ugly about Trump, but I definitely have Trump disappointment syndrome. I mean, I definitely, some of the stuff he's, and don't forget, to lower the price of beef, we're not going to help American farmers be able to do that. We're going to get it from
Argentina.
Argentina. Yeah. So again, TDS here. What is it? Do you think there's a possibility of getting us back on the gold standard? I mean, do you think that what's going to happen is going to be so hard and so fast and so bad? Those of us who have actual metals in our possession are going to be like, awesome.
Sure.
Well, but before you answer that, Eric, let me ask you this, because it goes along with that. I think still on the books for the United States, gold is still valued at $35 an ounce, isn't it?
It's at $42, I think, and 23 cents. Yeah. Yeah. So our gold reserves, that's why you can revalue gold upwards as a solution. Jim Sinclair was the Mr. Gold who predicted the gold rushes, two of them. Sadly, he's passed away, but his last prediction for gold, using his calculation that came to fruition through the gold rush in the 80s and then 2000s, his last prediction was that gold would be 30,000 plus an ounce.
Wow.
Which is, say that again,
$30,000 an ounce plus was his last prediction. And he was right twice. And he basically is calculating that. I think he uses the foreign debt outstanding and his calculation, but they literally called him Mr. Gold. So if people want to research Jim Sinclair, I think they would find it to be fascinating. But again, the positive of that is if you have exposure to metals, it's life-changing for you.
Yeah.
The other point I'd make is a lot of people freak out and they're like, well, that can't happen. Well, if it does, just like those that own Bitcoin, it's not that many in the United States population that actually have Bitcoin, right? So if you do a revaluation,
Michael bought it all. That's why.
I know Michael has it all. But if you do a revaluation of gold and silver, it doesn't actually affect that many people on the day to day because not a lot of people have exposure. So even Bitcoin going to 1 million, it's going to affect the people that have it. But does it change the entire economic system? I'm not convinced that that's the case. So that's why I think it's important for people to be conscientious about what is happening and what is store of value for their wealth moving forward. The kind of to your point on Trump, I think there's a lot of things that go on behind the scenes. I guess my point would be, I don't think you call it the golden age just for fun. And so moving into a golden age as a period of time also may mean returning back to gold as money. And if you claim that everything is about law and order, that would make sense because our laws on the books, our orders on the books certainly tell us directly what is money and what can be used as payment of debts. And that has always been gold and silver. So
what makes you think we follow law and order?
Well, we haven't necessarily done that, but I think executive orders is something that he really enjoys. So it's very easy to put an executive order in place that can allow you to reignite a monetary system. And I think the steps that he's done, while there are concerning parts to it, I readily admit that, I think they set it up where you can actually transition to that new monetary system. I think it's already operating.
Hey, I'm not a person, I don't dislike or love any leader. I focus completely on their policies and their procedures. So it's never been about ooh, Trump for me or ooh, Obama. It doesn't matter who's in power. I don't care. Yeah. I just want them to know that they're following the Constitution and that they're doing the right thing for people. So it's not like I just have Trump disappointment syndrome because we started with the Epstein files and then him wagging his finger and saying, you need to forget about this. This isn't important, and you're like, but dude, you actually campaigned on releasing these files and now you're going to treat me like I'm 5 because I'm expecting you to uphold your campaign promise. I don't think that's crazy to expect people to uphold their campaign promises. That's just me. So, John agrees with me. Doing good things 80% of the time never offsets the bad things you do 20% of the time, which harm people or put people out of business. So Jeremy says, see, it's a total coup if we don't build local or regional resilience quickly because they're hitting us on all fronts.
Yep.
And then Shelley says, questioning is not TDS disagreement. Is not TDS, Trump derangement syndrome. I get what you're saying, Shelley. No, Trump disagreement syndrome is not Trump derangement syndrome. I just would like to see him do
much more. I just want to see them remove the Federal Reserve banking system. They could literally, in my opinion, Eric, they could use the Gold Act like they did back in 32 or 33, whenever that was. They could revalue all those assets, pay the debt off, and tell the banks, we're done. We're going to, from now on, we're going to reactivate our treasury. We're going to print our own thing. Other than, I wish they'd just say, too bad. We're not, the dollar's done. We're just going to print our own from now on. That's it. Good luck collecting.
Yeah. But
I wish they'd say.
Oh, yeah. Well, and me as well. And I think most of the people that are watching this morning as well. But the only problem is, what havoc does that wreak on everyone at this point to do? You're talking about somebody who's moving rapidly close to, what you hope is a retirement situation where you can at least not have to work, 72-hour week. So what does that do then to those of us who are like, well, I have a little money, but it's in the market and,
Sure. I think that anytime a government is going through a monetary reset, they already know what that reset is well before we even as a public start to think about it. And my point would be right now, even when the euro rolled out in 2000, what people don't understand is digitally it was operating for 2 years behind the scenes. And then they rolled it out over a federal bank. They had a banking holiday and they rolled it
Oh,
out. And
that's
dumped all the
right.
money.
I forgot
Yeah.
that, Eric, for
And
sure.
you just exchange the currency. I don't it's not like they don't know how to do it to limit the problems in the marketplace. It's not now inevitably some are going to get hurt through that process.
Yeah.
But I think if they genuinely have the interest of the people to be debated, they would do so in a way that you shouldn't have to worry about your retirement, Social Security, those types of things that certainly your age group is going to need to rely on for retirement to actually occur. And if they have the best interest of we the people, that would already be determined and operating behind the scenes to make it as seamless as possible. Which, again, that's my optimism. I know it could go dark real fast, and that wouldn't be cool.
And on that other question, like you said, Jenny, with, I've got some money in the market. If this thing fails, whatever. Don't forget, we did that entire show on David Webb's The Great Taking.
Yep.
Yes,
with
I know.
all those assets, they're no longer yours at all whatsoever. You are not, just because you have a piece of paper that says, here's my portfolio, here's this asset, here's this. Those have all been completely reorganized, and we're no longer the owners of any of that stuff. So if something happens, if anything happens, all that stuff is going to zero anyway.
Yeah, the first step is kind of admitting it, right?
True.
Like, it's just like you already don't really own anything. So how do you find happiness through that?
Isn't that sad though? We talk all, so many of us talk about, Schwab says, you own nothing and you like it.
Yeah.
And, the only problem is we're already there. I mean, we're already there. We're just so excited about OSU football and the thunder and little round balls banging up and down on, hardwood floors that we don't really care to know. I mean, at this point, there are so many people literally when you can explain this to these people and they're going, la, 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 can't hear what you're saying. I mean, because they just don't know what to do about it at this point. They feel like it's out of their control. And if they just play ostrich and stick their head in the sand, then all of it's going to blow by, above them, and they'll be fine once they pull their head out. I mean, it's not going to happen, sadly. There's no place to go. You can't print this much money. You can't. You can't print that much money and have that much in debt and just go, oh yeah, one day it'll all go away.
Yeah.
I mean,
jubilees, some type of jubilee coming to fruition. We should also mention too, I mean, what I oftentimes think if you're a state leader, what can you do? Right. I do think like Wyoming, I've always found it interesting. They have a sovereign wealth fund. Why Oklahoma doesn't have that?
Yeah.
And most of their sovereign wealth fund goes towards their schools. If you go to Wyoming and visit their public schools and look at their facilities, they're unbelievable. And that fund is managed by the state and it's appropriated to the people, but it's really changed the dynamic of the quality of life there and the educational opportunities for their kids. Whereas I'm here and I'm like, why hasn't anybody presented this idea? Why aren't they utilizing it in Oklahoma? The North Dakota example is another one. You have a state bank that even through COVID was profiting and investing back in, where all the smaller local banks kind of funnel into that, but all the receipts from the state, all the tax dollars, et cetera, funnel through that Bank of North Dakota. I just think these are models that our leaders should be looking at. And my biggest pet peeve is just the fact that our treasurer doesn't have any exposure to physical metals. You have depositories built in, and we don't have gold reserves. We don't have that in our teacher retirement. We don't have any exposure to it. And that's a real problem.
Well, now Cody Maynard last year, who's a state representative, southeastern part of the state, he did write a bill, and it did pass, believe it or not, that was to, and I can't remember if it was Bitcoin or if it was actual metals, but he was trying to do something similar. He or trying to start it.
Yeah.
And it did pass. So I think we just need to build on that. Adam says, so with gold guess at 30,000 would mean silver would be over 375.
Yeah, I mean, the ratio
might be a lot
matters.
more than that, actually, Eric.
Yeah.
You know, it would probably be close to
Dang.
1,000 or a couple thousand if gold was that high.
Well, the ratio matters, right? So if you went back to the constitutional ratio of 15-1, that's $2,000.
Yeah, that'd be 2,000.
So 375. You're not, honestly, I think you're at like $240 when you adjust for inflation,
Wow.
not using the CPI data that we have now,
Wow.
and instead looking at the actual, like Shadow Stats has a
Wow.
great inflation calculator that we used in the 80s. If you adjust, even $50 silver today is like so cheap when you adjust for inflation based off of what it was in the 80s. So I think you'll see it's possible to have that type of price point. The other point I'd make is Exter's pyramid, if people want to research that a little bit, his point is everything is a derivative of gold. And when you take everything as a derivative of gold, that's a great way to look at the world and try to preserve your own wealth. Even for Bitcoin, I think if you look at like gold's performance of Bitcoin since probably 2020 onward as a derivative of gold, gold is doing well in the current environment. And if you have a revaluation like that, even for Bitcoin, I still think Bitcoin might be a derivative of gold in the end, even though it has that finite amount. It's going to be worth a ton. I'm not questioning that. I think that it's already proven itself in its marketplace. But I kind of subscribe to the fact that most everything on earth is a derivative of gold because it already is the international monetary standard.
Yeah. Right.
So,
well, Eric,
Lot to cover.
I never know what to think when we're finished.
yeah. Optimism.
I don't know
Everything's
whether to go, oh, I'm happy. I'm not happy. I never know kind of what to do, but I will say, I do think, between you and Miguel here, we end up getting a really, so many of us who don't have any kind of, economic knowledge. Is that what I want to say?
Well, I wouldn't even say economic. It's just understanding actual money, how money works. And we're just not taught anything about finance at any level. And finance is what really controls the world. I mean, it really does. That's what controls the world.
It is.
Our current education system, outside of maybe learning how to balance a checkbook, that's about as far as it goes. People don't want to, people just don't want to take the time to look at it because it's complicated. It is complicated, but it's complicated on purpose. It's highly complicated with all these different contracts and these futures and all this terminology and all these things. It's just legalized gambling, literally, for the people that understand it.
That's why I always say it's verbicide linguistic tyranny.
Yeah.
It's very hard because when I say backwardation, people are like, well, I have no idea. When you say basis points, these concepts aren't hard. It's the linguistic side. You have to understand the language to be able to function in the industry, which is how they've basically manipulated the population to not be their own monetary advisors. You have to go to somebody else for that. And, I'm not convinced that's a great model. I think that the American people are smart enough to actually learn this. And if we incorporate it at the lower level.
I don't know anymore, Eric. We've dumbed education down for so many years. I'm just not sure. I meet people when I go out and I'm frightened. So I'm not sure that's.
You're saying we're going to get what we deserve. Is that what you're saying, Jenny? We're going to get what we deserve.
Well, but I guess kind of in a way I am. I mean, all of us have, like I give this example frequently and I'll give it again. I don't remember jack squat I learned in high school. I don't remember jack squat. I remember screwing around in drama class and, vocal music. And I remember doing some math, and I remember always getting in trouble for talking in class. And that's about all I remember getting out of it. I remember once in psychology, we built a rat maze.
Yeah.
Okay, these aren't the things to begin a life with. And that was all the way back in the 80s. I graduated high school in 1981. It wasn't until I got to college that I actually learned anything. And beyond that, it was beyond college before I went, wait, I think I'm getting screwed over here and somebody's not telling me the right thing. And
Sure.
then I had to go back and relearn the Constitution and read about that and the whole, hold on. Where's the book? Hold on.
It's difficult.
Oh yeah. Cleon.
Yeah. You're muted.
You're muted.
Oh, there you go.
Muted. I am muted. I should be unmuted.
You're good. You're good.
Okay. So yeah, this was the book that I somebody said you have to read this book. And honestly, look at all the tabs.
Yeah. Fantastic book.
I mean, but it really was. I mean, if you didn't want to read 27 books about the Constitution and the founding of the United States of America, 5,000 Year Leap is totally it, hands down. And then if you want to get Skousen's other book, which I don't even know where I put it. I put it someplace and I can't find it now, which is the one about the Communist Manifesto. Eric, what's the name of it?
I'm not sure.
The
Naked Communist, was that
Thank
it?
you, Naked Communist. If you read that one and then you see why it is that we've separated from what the founders wanted and why we are over here. But the point I'm trying to make is I taught myself.
Correct. And
I taught myself. Don't tell me that God didn't make people with big enough brains for them to teach themselves if they really wanted to do that.
Yes. What I think from the educational side that kids especially remember, and I believe this myself, when you tell a child the truth, it resonates with them,
Yes,
and then they want to learn more. So what I've found, even in talking about monetary history to kids, it's fascinating how many of former students I have that will text me and say, oh my gosh, like silver's at $50. Where they learned so much stuff over a period of 9 or 10 years. And then the one thing that they stuck to was like, when you alternatively provide them a narrative that is outside of the norm and it resonates with them, they're like, wow, I really learned something today, which is very interesting.
But kids have a BS detector that's
100%. And
their
and
I think that's and I think that's the reason why kids are why we're having problems with depression in children and young people. It's because they know they're getting fed a bunch of BS.
Yeah.
They're just not sure how to go back and figure out how to separate the BS and then find the real gold, if you will.
Yeah.
I mean, kids are not dumb. They're super smart. Think about how fast their brain cells are dividing, for God's sakes. I mean, they're super smart. They get it. We just keep shoving them down and telling, no, you have to eat this stuff because it's good for you. And they're like, no, and it doesn't make any sense.
Yeah.
It's they're not dumb. Okay, John says everybody needs to own their own business. They'll learn in a hurry how corrupt money is. Even more so how the big are favored with cheaper prices. It's so true. We're so upside down. And Earl's daughter says, I do appreciate the insight. A lot of things to ponder. The good news is I'm not poorer than I was yesterday, but no promises for tomorrow. Good luck, folks.
Yeah.
And it is true. I mean, we just have to that's, why we've had you on numerous times about money, because that is That's a big thing right now, and we do need to know. So show those books on our way out. Show
Yeah.
the books
So
on people
one
reading
is
it.
this From Austerity, Public Bank Solutions, Ellen Brown. She was at UC Berkeley. She's retired now, emeritus status. Just an interest from, a lot of people, again, in the sound money movement, the idea of banks, there's kind of this dichotomy that they're at odds with each other. But this is an alternative solution that gives a great historical context for it and options with examples of how I always go to that Bank of North Dakota because it really has functioned independently. So if people want to research it and check it out. And then Chris Marcus did the big silver short. If you just want to not invest as much time in researching, check out Margin Call, the movie. And basically that's what's happening in the marketplace on the daily. And it's happened for a long time, especially in the silver market. And so we'll see how that continues to play out. One point I'd make too, with the LBMA, a friend of mine in the industry did confirm that they usually they ship the 1,000-ounce bars. Everything on the COMEX in London exchange is in 1,000-ounce bar form.
Wow.
So 5 of those is a contract, 5,000-ounce bars. That's basically the raw material of how the refineries put it into circulation.
Okay.
For the first time that they knew of in their entire career, London was short metal. They actually had planes shipping 1,000-ounce bars over, where in a normal capacity, they would use shipping containers and go by boat across.
Because it's so heavy.
Yeah, that's pretty rare to have to call in the airplanes to ship over,
because they didn't have it. They didn't have it, Jenny.
Yeah. They don't have
so
it.
Like whoever, JP Morgan or, whoever's got the silver, they're sending it over there to fill those contracts.
Yep.
And speaking of JP Morgan, I want to show something here. We talk about all this money stuff. The biggest problem within this system is our own government. I mean, that's really the biggest problem.
That's a shocker, Michael.
Well, I just want to show something as far as the monetary side goes. Yeah, they spend a bunch of money. They're in debt, all this. And also this is the DOJ's website. It's funny up here. Look at this banner up here at the top. It says, Democrats have shut down the government. Department of Justice websites are not currently regularly updated. I wonder who had them put that up there. That's actually
Trump.
Okay. So this goes back to JP Morgan when they were rigging the gold and silver, the precious metal markets for 8 years. They rigged them from 2008 to 2016. So what happened is JP got a slap on the wrist. Oh, well, you just pay the government, $920 million, and then you can just keep going on. How about the state of Oklahoma telling JP Morgan, you rip people off, you're not going to do business in the state of Oklahoma.
Right.
That's what needs to happen. Not just they get out of jail free card. I guarantee you they put $1 billion in their bank, in their pocket, or $2 billion off of this deal, maybe even more, but you have these massive corporations that work, behind the scenes. They're constantly rigging all of these markets. Anything that's electronic and paper market, it is completely rigged no matter what. I don't care what anybody says, they're rigged.
Yep.
So JP got caught. They got a slap on the wrist. Here you go. And then also earlier we were talking about you were talking about having less, we're going to have less. This is that little, I was driving by this the other day and this
Tiny
is that little
movement.
this is that micro neighborhood off of like First and Frets in Edmond, that like they got all these houses that literally have like 6 feet in between them. So this sign just killed me because it says the loveliness of less. And that's how they market this place. The loveliness. I don't want less. I want more. I don't want having less to be lovely. In my opinion, I want more to be lovely. But
then they're luxury.
Yeah. But it goes along the same deal with Klaus Schwab and all that stuff. You're not going to have anything, and you're gonna love it. Have nothing and love it.
That was the tiny house movement, all of it.
Yeah, John Boy says that's the start of the 15-minute cities. And
Yeah.
and I mean, all of this is, if honestly, I think Edmond right now, but that's fallacy of small sample because I drive through Edmond a lot. I think Edmond right now is just the epitome and picture of what it looks like to begin a 15-minute city. I mean, all their new growth, anything that's new, they're not trying to put up nice homes. They're all those POS, little tiny walk-ups, over to the west of town, to the west of Broadway, just past the railroad tracks. You drive by just west of the railroad tracks off of Broadway, and you're like, these look like, those apartments don't look like any place I would like to live. It looks like something out of a Star Wars movie that's a prison. I'm like, and I think they may be like putting prisoners there because who wants to listen to that, the horn of the train honking all the time? It's like, who came up with this dopey dang idea? It's so stupid. They're ugly.
We've got a lot of work to do.
Yeah, and I'll bet you they're charging just primo prices. Hey, come pay the primo prices to live in our looking apartment complex where you get to hear the train at least twice a day, if not more. I mean,
and feel good
go,
about it.
What?
And feel good. Hey, Eric, I was going to tell you that M2 supply is like 22 trillion.
Yeah.
If you just go back 20 years ago, it was 5 trillion 20 years ago. They 4x'd it in 20 years.
For sure. Yeah. I mean, have people's salaries 4x'd?
No.
Yeah. Good point.
It's so, that was what upset me so much about teachers' raises.
Gosh.
I certainly, any public service worker, police, firefighters, teachers, I mean, we absolutely need these individuals. When they're protesting and they get these raises, the saddest part of it is that they don't understand money. So it's fine. The state reps, they'll be like, yeah, we'll give you $5,000 more. And then it's just printed on a ledger somewhere and the value of the dollar is decreased. So their purchasing power actually goes down and they have less through the negotiation than they did if they had just stayed where they were. So, it's so frustrating. But that's the system we're operating in until people want to take on their own investment in their own education. I think it's hard to shift.
And I agree, but I mean, we've had a really nice audience on live on a Wednesday morning that was supposed to be a Friday morning, and I think, or a Friday morning that's supposed to be a Wednesday morning, however you work that out. And I do think people know. I mean, one of my 23-year-olds came to me, this last week. I just feel like something's going on, Mom. I mean, something's going on. I just don't know what it is. And I'm just kind of worried because, people can feel it. I mean, there's a shift in all kinds of different things. And I think hopefully it's not making them put their head in the sand, or it's making them want to run away, or it's making them depressed so they need to get on medication. Hopefully what it's doing is making them understand that what they need to do is do some education. You've given us some education today, Eric, you and Michael both. And, you've given us some books that we can look at. And I think I'm going to go watch Margin Call tomorrow night. And
it's great. It's great.
So I do think it's important, and I do think education is the only way out of it. And I do appreciate you coming on today and talking about it.
Absolutely my pleasure.
All right, we have somebody on Friday that I've forgotten who that is.
It's me. I'm actually Friday also.
Yeah. Well, and while you're looking that up, Jenny, if Carmen's still on, Carmen, email me. I'll tell you what I do with silver and who I use. And then also
you can give her my contact if she wants gold backs.
Yeah.
I have the website too.
Yeah. And then Adam, if you want to talk crypto anytime, I'm happy to talk about Bitcoin and XRP and everything else. And
hey, I should plug Red, White, and Blue too, Jay.
You do. Please.
If individuals, this is the children's magazine that I started with a few of my colleagues. Rachel is in Iowa, but it's growing month after month. If you ever want a hard copy of something delivered to your children at their door that is educational, it's certainly patriotic, has a faith-based article in it. And some of the information of which we talked about today. I mean, we talk about sound money in the issues. I wrote a whole article on water, which is pretty fascinating if people want to check that out. But it's a great kids magazine that provides as much accurate, truthful content as we can to their doorstep with activities, workouts every month, recipes that are healthy for kids that, we should be eating off our farms like Jenny and I do, and building those contacts. So please feel free to check that one out. We're continuing to try to get the word out.
So, and there it is right there. And it's super
Yeah.
easy to find. Red, white, blue magazine.
Yep.
That's what it is. It's
Our
easy
November,
to find.
our November
Red, white,
issue
blue magazine.com.
is veterans. So we have veterans is our November issue. And we actually go through all of the veteran uniforms and talk show the kids like how different branches of the armed forces. And we've tried to interview some veterans to provide some context for kids. So it's pretty fun.
Well, and let me just say this, because I pimped your magazine all over everywhere. And a couple of the things that people have said is, oh, well, they're pretty expensive. And I want to point out that the reason why they're expensive is because these are not weekly reader magazines, people.
No.
These aren't made out of newsprint. They're made out of, what's the pound cardstock?
Yes, they're heavy duty. There's 50 pages of content only. There's no advertisement in it. So there's a lot that goes into making this magazine every month. And so I know $13.95 seems steep, but you're talking about a physical printed magazine in color, the full gamut with great. The artwork in it is pretty incredible.
And you're not spending that per week. It's a once a month publication that will survive 3 or 4 kids over the month.
Yes.
So watch me. I'm playing Trump now. I'm wagging my finger at you like you're 5. So stop playing that game.
I would say a better investment than Netflix.
I would say anything's a better investment than Netflix.
So that's how I'm going to sell it from now on. Get rid of your Netflix. Get Red, White, and Blue magazine for your kids.
Yeah.
I love it.
Okay,
it's
so
great.
now I remember what happened. Eric, you and Katie had to change dates because Katie's grandson was going to be born, and they ended up it ended up happening sooner actually than we all thought it was going to happen. So but that was why I guess I got Friday stuck in my head, because you were supposed to be on Friday, but we changed with Katie.
Yes.
But on Friday, we are going to have Karen England and Bonnie Wallace, who are going to be there. They're both actually from out of town. They are going to be coming into town this weekend for a conference at Liberty Church on Sooner Road in Oklahoma City, and it's called Are Your Kids Safe? And it's going to be talking about Sherry Conley's going to be there, as well as these other 2 ladies, and they're going to be talking about pornography in schools, quite a bit of information there. And I'm not sure, do you have the I don't think I put up here it is. Yeah, I do have it. So let me share. Yeah, 1 second. 1 second. We all know how quick I am at sharing my screen. All right, here we are. This is come on, buddy, share. All right, there it is. Okay. Are American Kids Safe? How to win and keep our kids safe in public schools. So it's Friday, October 24th, starting at 7:30. And then there's a breakfast in the morning at 8 a.m. And then they'll finish up at 1 o'clock. And it's going to be several people. Well, there are already 71 people, I guess, who have signed up. It's going to be at Liberty Church on Sooner Road in Edmond. So there's the address right there. And we are going to have a chance to speak with, here's the part of the flyer, I guess. We're going to have a chance to speak with 2 of the ladies who are coming in for that conference. And we're going to speak to them on Friday morning at 9 a.m. So that's if you will join us there, and then put the conference on your calendar for Liberty Church for Friday night and Saturday morning.
And Karen is the one who did that website that we
Oh,
showed on the podcast that we didn't know was her when we were actually doing it the first time.
which
About-
was that great website about pornography
Yeah.
books in schools.
Major
She did a
issue.
great job with that. Yes, it absolutely is. All right. So I think we've covered everything. Eric, again, thank you so much for being with us again today. Excellent conversation, everybody. Please make sure to do your own research, and we'll talk again on Friday. So thanks for being with us.
Thanks for having me.